Today was a great day in the market because we had some consolidation, I would say, and we may have another move downward, but we're going to talk about that as we get into some important technical analysis for the SPY Qs, Apple, Tesla, Amazon, NVIDIA, AMD, and Meta. And we're going to take a look over at AMC and GME as well, so stick around for that. But you'll notice I have a weekly chart up here. I just wanted to mention something real quick because we have a major sell-off signal. We have the SPY crossing over on the MACD telling us there is some kind of weekly pullback happening in this area. Maybe we need to make a stronger base. We're going to talk about that in a moment. The main reason that I do have this up on the weekly chart is going to be to show you the VIX. The major sell signal that I am seeing here is the completion of this signal we've talked about for a long time. We've talked about this ever since we called that short squeeze back in the day, and we got that short squeeze, but we said if this forms and completes and goes positive, that's not a good sign for the market. That's actually a big macro sign that we're going to experience some kind of crash. Now that can take a lot of time to come to fruition. It's important to understand that. You can get retests of the moving averages like we did here. You can do that again and again, okay? So it could take some time, so we'll pay attention to those shorter time frames. But the main thing you need to see here and be aware of as you are trading is pretty much at any time now, we can experience a major crash, maybe the biggest that you've ever seen in your lifetime, right? We're living in those times right now where we could see the biggest crash in the entire stock market history based on this signal. It is a triple divergence on the MACD. It is a triple divergence down here on the RSI at the same time, and both of these are lining up. We're seeing it cross above all the moving averages, and now we're just seeing if it's going to pop off one more time. We're going to go back into volatility, but I want you to be aware of this while you are trading, okay, as we go in those shorter time frames to really realize there is some major risk of downside. But is it going to go down in one shot? No. You guys know I am leaning towards that bear market behavior because that's how they can steal the most amount of money from retail traders. Okay, so if we're going to have some bear market behavior here and possibly even go to an all-time high again, you know, we could see some kind of fake out like that. This is what you would want to see, right? If we're going to see some more bear market behavior, we have curled up on a 2-hour chart. We're kind of moving sideways, almost like a consolidative move, getting these moving averages a little bit closer together, still holding that 200 on the 2-hour. Now for tomorrow, you do have these daily expected moves. Remember 549.91 to the upside and 539.61 to the downside. Now that's your 68% zone for tomorrow. This is calculated using the options data, and we land in that zone 68% of the time. We landed within it today. Now the 2-hour has crossed up, but is that going positive? No, that's going to take a lot of work. So you might want to make a stronger base. And I think that's overall what we are going to do here. But we have to pay attention and say the 2-hour is saying we're bouncing, and we are bouncing. So that's what we were paying attention to. We saw some of those signals forming on some charts that we're going to go through in a little bit. But as far as the near price action going into tomorrow, we have to pay attention. It's an earnings, a lot of earnings coming out. So we have to pay close attention. And we'll notice here that you do have a 30-minute that just curled down at the very end of the day. So weirdly enough, even though it is positive, your MACD down here, your indicator is actually telling you, hey, there could be weakness here. And the funny part about that is your RSI is telling you that as well, really curling, finally pointing down again past that center line, telling you downside is the most likely option going into tomorrow morning. Now the stock market changes very quickly. So if that just wanted to turn up in the next one, hey, you're positive and it's a go. Most likely you will start to cross through these levels. But if this is going to actually add up to anything in the near term, we have to think negatively about the SPY for a short term, just because you are turning over really close to that center line, taking you into a negative trend. Now, where would we look at in order for that to base out? Well, we can use our daily expected move. So if we do see this curl down, we would look for that to curl back up at any time closer to that center line. You notice the last time that we did curl up, we were very far from the center line. So if we're going to get a higher low or some kind of divergence, I'm kind of leaning towards the divergence at this point. We could see that curl down for a moment and curl back up. That would be much closer to positive territory. I would really look out for that because you might create some kind of divergence down here, if not a higher low. So I'm looking for that as of right now. Going into tomorrow, obviously with more price action, that can really change. But right now, that's what it seems like. So if you start to lose this 50 on the 30-minute, you can head head down towards that move. Maybe you get past it very early on in the day, curl over on this MACD, and then we see some buying back up, right? Get back into that 68% zone. So we will be looking at that live tomorrow morning if you would like to join us. And also those courses down in the description to learn a lot about how to trade around these ranges, how to use my trading strategies, how to learn about these indicators is 90% off. You can literally start swing trading for $50 right now in the description. You can literally start doing the more advanced style, which is just how to trade in any market, really the things you need to know in any market in order to trade. You can take that course. That is down in the description as well. It is only $100. It's literally those two courses. I'm here to really try to help out the retail trader, and therefore I wanted to make those courses a great deal as volatility is higher. So look into those if you're looking to learn a lot of this stuff. But I'd really be aware of that scenario. If you wanted to, you could probably see it on the hourly as well. If we're able to turn down for a few hours, maybe even just tomorrow, and then you see that bump back up at the end of the day or going into Wednesday, we actually could see that divergence on the hourly proven pretty quickly. So we're going to pay attention to that with you live tomorrow. As we go into the Qs, you're going to see a very similar story as we have the hourly up. But real quick, just first, I wanted to show you the 2 hour is curled up. So it still makes sense if we wanted to bounce higher. Don't neglect the fact that we can go higher here, and you do have that daily expected move to help you out. If we're going to make some kind of new higher or lower high in this area, well, we could burst through this and then just turn back down and then create a 2 hour divergence in the future, which I think will lead into the overall bigger bounce. Okay, a 2 hour divergence would make sense here. But usually in order to see a 2 hour to really bounce, well, you need to turn up a 30-minute chart with some divergences, and we have consolidated in this area. We got really, really close to the center line, but it looks like we want to turn over. So one thing for the Qs going into tomorrow, they're not necessarily giving you that blip, right? They're not necessarily giving you that blip, but the price action almost looks worse because you're closing below all of the moving averages on the 30 minutes. So look out for that. That means we need to look out for some daily expected move. That 2 hours is going to keep bouncing. Hey, 470.66. And then if that 30 minutes is going to roll over, maybe we make a divergence down towards 457.14. Okay, so if we do experience that weakness, we're looking for a similar thing, that divergence to set up for us in this area, which happens to be around these lows. So we could pop out of this area. The cool part about popping out of this area, remember, this is your 68% zone. This thick yellow line is the monthly expected move. So this not only would be a divergence outside of a daily, which sometimes just don't play out, right? Because a daily happens more often. It's actually outside of a monthly as well. And that kind of doubles it. It really says like, hey, there is a 68, not just a 68% chance. There is a 68% chance to see that actually gain back some steam to really curl up that 2 hour and start heading higher. So we'll pay attention to all this stuff live with you guys tomorrow and see what the earnings have in store for us. I know PayPal has earnings and a few others, and then we have a bunch of earnings at the end of the week. But if we wanted to send this lower and then make a move higher, and then Friday, maybe that pulls down, or maybe this is just going to be a serious groundwork that builds up into Thursday. And then on Thursday, we actually do get those things after hours. So we get a few earnings after hours, so we have to pay attention to that. But really, I think the thing I'm leaning towards is a 30-minute or even an hourly divergence that gets you a little bit closer to that center line, right? I think the 30-minute is a great one to watch for now. See if that pops down early on in the day and then can curl back up, because you would have divergence there. You would have tapering. You would have everything if this just made that little signal. Even if it's a higher low, that's really what I want to be paying attention to as far as tomorrow goes. Now it's important that we just looked at the SPY and the Qs, which the purple lines, you do have those updated weekly ranges. So just make sure to pause around the SPY and the Qs and make sure you have those purple areas for you, because that's the weekly range. Those are overall the most important, in my opinion, every single week, is to have those, not necessarily dailies, but really look for those weeklies, because those are really important. Get those on your chart. They will really, really help you out. And a lot of people can attest to that. Hopefully someone in the comments can say how it has helped them, how the courses help them understand how to use those ranges. So we need to look at some stocks that make up what we're looking at here. And as it goes right now, you've had Apple completely pull back of this downside move. It's really pulled back up with a bounce in the form of time, right? We've just really gone sideways. If you look, it's dead across from where we have been. And now we try to get that crossover right here. here didn't actually prove to be any kind of selling in there, and now we got the price action real tight. So I believe some kind of decent move is coming for Apple really soon, and you'll notice here this is not positive yet. It's right at that center line, right below it. So if that does cross down, you can see a downward move. That is where we will really pay attention to our weekly moves on Patreon. That's right, we give you the weekly expected moves. We calculate those for you and put them on Patreon for every stock that we're covering in this video. So I'd really be paying attention to this scenario as earnings is right around the corner. But remember, earnings is overall a 50-50 flip. You can pay attention to the signals. I always just say, hey, either stay away from earnings completely or just know, hey, big moves happen around earnings. You can downsize that position just a little bit, and you'll still make plenty of money if these signals play out, because it's a 50-50 flip. They could announce good news or good numbers and then bad news, and the stock goes down and everyone's sad about that. But overall, if you just pay attention to your signals, okay, even after earnings, pay attention to those signals after earnings, you will see the next move in front of you. So if this is able to curl down, maybe we want to clean it up with like an hourly chart or something like that. See this curl down, make a little divergence down here. I think that would be what you really want to pay attention to for Apple at this moment. But in this moment, you have to say, hey, the hourly says I'm supposed to be bouncing. If this is some kind of bounce with time and that curls over, we'd be looking for a divergence. Now, Tesla has seen an interesting move. Tesla's doing something kind of cool here, which we want to look at on a 30-minute, because what it's doing is it's kind of piling up. It's kind of piling up right underneath the weekly expected move. And if you do that for long enough and you break through, you build that liquidity in here, you can see a big move forward. The reason I'm talking about that is because the 2-hour actually like just curled up. Now it's been curled up for a little bit, so you can see that turn back down, but you'll notice these wicks. These wicks are right at that weekly expected move, just shy of it a little bit, but it gives you that little place that you say, hey, the risk to reward is a little bit low now, because the options market is only expecting, you know, Tesla to go to say 234, which is around there. And guess what? The price action gets there and we start to see a little bit of profit taking stuff, but some consolidation overall. So 2-hour is saying right now, hey, I'm bouncing, but is that fully going to be able to go positive, or is that weekly expected move going to cause that to need some kind of higher low or something like that? We'll pay attention to it. As of right now, the 30-minute is pretty positive. If I really blow this thing up a little bit here, once you start to go positive like this on 30 minutes, notice this looks completely different than the SPY, the Qs, than Apple. It is positive, so that gives you a little bit more probability of seeing some kind of higher low, but you're still looking for, hey, does this actually get to that center line and then curl up into positive territory? That's what I'll be looking for from Tesla. If it sees another move higher, I'm going to be looking for some micro stuff in here to see if we're going to turn back into our 68% zone, but this is a sell-off zone. It's a very important zone. That's why we keep tagging it and seeing us wick out. Okay, so we'll pay attention to this tomorrow as we are live. Amazon, this one here did cross over, so that is overall saying, hey, the most likely direction right now is for a pullback. So we could continue to pull back like this here and just see if that's able to rotate up at any time. Once you do that, I really think that this 2-hour might actually take over. So if we have more work to be done, that 2-hour can roll over for a long time, and then we'll have to see what happens around earnings. But for now, I believe Amazon here could be experiencing some weakness due to this 30-minute crossing over on this MACD. It's still close to that center line. We still can get that higher low scenario because we are up here in positive territory. You can start to get those higher lows, but if it needs some more work to be done, hey, we could come all the way back down and test something like 179 before we're actually able to base out. I like the look of Amazon. This is a trade setup to the upside that I have given on Patreon, and I really do like it, but you have to make sure that these things are playing out. Make sure you know how to manage your trade, because as of right now, this is telling you, hey, manage that trade for just a moment and then see if that's able to break through one more time, as you're not overbought or anything like that. But this is telling you that the most likely direction for Amazon going into tomorrow morning is to at least get some kind of pull down. Until that curls back up, we can't really talk too positively about Amazon on the 30-minute chart. Now, looking at NVIDIA, this is another one I really like the look for, right? On the 2-hour, I really like this look, but it's never confirmed, right? This has not confirmed yet. So one thing I'm paying attention to with NVIDIA here is, do I see divergences on the 30-minute? Because a lot of the time 30-minute divergences in the near price action turn up that 2-hour, and if you have a 2-hour divergence behind it, great, we can turn up a daily and we can see a prolonged move from NVIDIA. So I want to go into a 30-minute. Do I see that forming here? I do see it forming, but you notice that it's not really down towards those oversold territories. We got really oversold over here. We got really down on this MACD, but now we've built up to that center line. I think you have a good shot to create that divergence and then see that thing curl up. That would make total sense. Right now, the overall take on NVIDIA, according to your MACD, is, hey, you are crossed down in negative territory, which means bad things can happen. It means watch out. But, and this is something that I go over in my live videos a lot. I'm like, hey, when this thing does cross over, I want you to think, oh, this is terrible. And then if it turns back around, you go, oh, okay, it has divergence. That's not that bad, right? That's pretty good. That's overall what I want you to do, because that will help you in thinking like this is a bad thing to happen and this can escalate. If you're in negative territory, it can escalate to the downside. If we were in positive territory, it can escalate to the upside. But right now it happens to be downside. So that's what we have to talk about for NVIDIA crossing down. See if that divergence is able to form down by these lows. See if we get some kind of double bottom or something like that. We can pay attention to weekly expected moves and all that kind of thing. AMD has been really struggling getting that kind of bounce with time like Apple did, just moving completely sideways. And you notice, hey, we're starting to make a divergence that is getting closer and closer to the center line. So if this is able to drop down, we could head, I would say somewhere around 133 is where I'm really going to start paying attention, see if that's able to base out and just turn back up. So if this MACD turns down and then turns back up into positive territory, hey, that would be a good sign for momentum dying out. And there could be a shift here that then leads us into a big positive move. We'll see what happens with AMD as far as tomorrow goes, but that is the signal I'm paying attention to. If you look on a 2-hour, some people would say, you know, there is divergence down here. You're not necessarily seeing it on the MACD and RSI at the same time for the 2-hour, which the 2-hour likes to turn up the daily scale. So I would really just be paying attention to that. Really just look for actual reversal signals, because this right here, yeah, it's a signal to pay attention to because you could be bouncing, but you only have a MACD divergence, which means, hey, we can double dip and actually go lower. We can see a reaction with earnings and see it come all the way back down to then create a stronger base. So we'll really pay attention to AMD. I think it does have an explosive move left in it, and maybe it just needs earnings behind its back to really cause that to happen. Meta looking forward, this is one trade that I was thinking about taking, because doesn't that look good on the 2-hour? You see the downward price action, you see the upward move on the MACD, your momentum indicator, and you see that upward move on the RSI all at the same time. All of this looks great, but the RSI failed to get above the center line, and now you're starting to cross back down through these moving averages, which just tells me, hey, this could go down for a brief moment. Maybe we need some kind of 30-minute divergence. 30-minute divergences love to turn up those 2-hour charts. So if this is going to experience weakness, which it already is saying pullback, yeah, if that turns right back up, positivity, and you break through the wedge. But if that is going to keep heading down, which is what the MACD is telling you is the most likely scenario going into tomorrow morning, maybe that has to go all the way back down to something like 453.08, maybe even cut that a little bit, create that divergence, which then keeps you from touching the bottom of that wedge, and you're able to hold up a little bit better, and then you get some good earnings. That would be an interesting scenario. I'm really paying attention to these things. Earnings always throws me for a loop. I just know to downsize those positions and make sure to manage my trades very closely. But something I'm really paying attention to also is the fact that Meta was able to get positive here is a great thing, because you can also get a higher low. So if we wanted to turn up at any time, I will be paying attention to this MACD. This is one I'm going to be paying attention to very closely. I did close that position live just to make my little 10-15%, just because I had a feeling that this did not look like the strongest move and we may curl down, and then we end up curling down. So I was right with my gut feeling there, and I just said, you know what, I'm not going to risk it based on the dollar. We're going to talk about that later, and volatility, but the dollar, we're going to talk about that in a little bit. It really convinced me to get out of that Meta trade. Now, we do include Microsoft and Google over on Patreon for those weekly expected moves, but for today, we are just going to talk about AMC for a second. Let's talk about AMC. Well, the first thing is this is a fantastic move. Obviously, we know the rigged moves have happened. I got to get you that new level for AMC. Please come to the live video tomorrow and I will update that, or join the Patreon. You just get it every single Sunday if you do that. So AMC, this is the line we had last week that can take you into a gamma squeeze. Now we have an updated one. It's a little bit closer, I believe, so we'll pay attention to that. But this is a great move. It took you into positive territory well in, which means what? It means immediately we have a higher probability for a higher low. And that looks like something that could be created right now. So we get that pullback down to the center line. This is a negative thing. It is saying down, down, down. If it crosses the center line, that's saying possibly going into a negative trend. So that is not a good thing. But as we look forward, if this is going to pull back, this is exactly what we want to look for and see if that can curl up into positive territory, curl up above this area. Then we have a shot to see a good move because this is something that's curling up into positive territory. So we're paying attention to that for AMC. As we go over to GME, there's a very interesting thing happening here, which we're going to give you the new gamma squeeze level for that as well. As far as this week goes, we're going to update that live. But this was last week, so you needed to get above that in order to see a gamma squeeze. We didn't do it. So at this moment, the 30-minute cross down, what do we always say? If that 30-minute crosses down, it's not the moment. The 30-minute crosses up, you have potential. So in this area for GameStop, you really want to see how there is some big divergences down here. Now, it's not necessarily triple divergence on the MACD and RSI at the same time. You almost have it, but I would say in this price action right here, which from this area here to down here would be where that divergence is made, this right here is very important. If that 30-minute can cross up, you have the potential for a very strong move, and you can see this 2-hour actually curl up as well, which has the divergence too. So it pretty much has the divergence as well. So we really want to pay attention to these things, because if that 2-hour gains some steam and actually goes positive, that can mean a big move's coming. You can look at the last time that we created a divergence. What ended up happening? Well, we crossed up on a 2-hour with divergence, very significant on the MACD and the RSI, kind of flat down here. So we had some divergences down here, and that led to, when that crossed, a big move up. That is how you read momentum, and that's what I really want you to take away from these videos, how to really read into the momentum, look for things, think of those scenarios, see them setting up, and then reacting when you need to. I think that is a very good thing to do as a trader, is to be someone who reacts. You kind of make those little scenarios, not necessarily predictions, just little scenarios that could play out, and then say, okay, if that happens, I am ready. I know exactly what I'm going to do. So if GME is able to curl up on that 30-minute, the 2-hour can curl up right behind it, and you have divergence on both, so that can turn around a daily chart. So for GME, we're going to look at this on the daily chart starting to go negative, which is not a good sign. That means some negativity can really come. We can spread out these Bollinger Bands to the downside. You don't want to see that happen, so you're really wanting that 30-minute and that 2-hour to curl up into positive territory. If that is able to curl up from this area, that would happen right away. So if this curls up for the next couple of days, you're going to get that daily MACD to cross, and then we might see something huge going on into next week. You just want to read into momentum. It will tell you when the big moments are happening, right? We crossed up on this bar, we see positivity. We crossed up over here into positive territory. I think it was right in this area, right on this bar, and boom, positivity. We curl up right here, boom, positivity. If I zoom out, you're going to see how positive those moves were the next day. And then we see the short sellers come in. So you got to be careful with this stuff. You got to understand that this is a fight between the short sellers and retail at this moment, and even some institutions that have bought in, and the overall stock itself. So this will be interesting when we look at earnings for GameStop going forward. Now, one thing I wanted you to be aware of was the daily dollar. Okay, Dixie on the daily was able to curl up on this MACD. We are seeing a moment where the SPY was heading higher while the dollar was heading higher, and we notified you about that and said just watch out, because by the end of the day, or even going into tomorrow, you can see that weakness come in, because a lot of the times that is spotting a rigged move. So at this moment, you have the dollar went up and the SPY went up at the same time. And look at that. Now the market looks like it might roll over. So we're paying attention to it, because if that dollar really gains some steam, we can start to see that crash. And that is what the volatility is telling us on that weekly chart. The daily is positive at this moment, and you're seeing some little divergence here on the daily scale on the RSI. So I would pay attention to that. One thing I'm really looking for from volatility, if we see another downward move, is kind of a sharp move up for volatility. Actually, we see the divergence on the price action here. Well, it's technically a reading, not price action, but the flatness of the MACD, the flatness of the RSI. But is that divergence significant enough for us to actually see a big upward squeeze and to reverse this back down at this moment? And the answer to that might be no for now, because it's not necessarily significant. So if we get some kind of bullish thing for volatility and we see that react up, can we create a divergence that's very obvious? That's very obvious in showing us that downward move and showing us that downward move on the RSI and MACD at the same time. That is something to really pay attention to. So I hope this video was overall helpful, but for the most part, guys, the main takeaway here, we have a moment in time where we're seeing some big macro volatility signals pop off telling you, hey, a big crash could be around the corner, but I still think they have a few fake outs left. So we're going to pay attention to it very, very closely, and I'm going to be watching it with you guys live. You can bring up any stock that you are looking at. I am more than happy to look at a stock for you. If you have questions about the course, right now it's $50 for swing trading. It's 90% off. It's $100 for how to trade in any market, and an option strategy that I have used. And we even talk about those ranges. We talk about a lot of things in that $100 course. It is probably the best thing that you can take, and it'll teach you how to manage your trade, which if you learn to manage your trade, you're immediately going to be better than probably like 75% of the traders out there, because they don't even think about managing their trade. They don't want to take losses. They want to try to win every single time. And what we teach you is more so, you know, treat it like, hey, you're playing a rigged game, so you're going to lose money at times, and just make sure you're not giving all of your money back to those Wall Street people who are greedy and try to trick you all the time, those market makers that try to trick you all the time. And we try to talk about those things a lot. We try to talk about those things a ton during the live video, so please join us. So thank you so much for making it to the end. I really do appreciate it. I hope you have a fantastic evening. I wish you nothing but luck in your trades for tomorrow, and I look forward to seeing you live tomorrow morning. Peace.